just days after President Donald Trump announced sweeping tariffs which shocked global markets. Some of the US's allies, like the European Union and Japan, were among those hardest hit, with 20% tariffs or more. But which countries were emerging as potential winners in Trump's trade war?
We will impose a 25% tariff.
Rivals from Brazil to Egypt to Turkey see a silver lining. They could provide trade opportunities, while other countries are hit by much larger US levies. Brazil not only escaped with the lowest, quote, reciprocal tariff of 10%, but the agricultural giant could also benefit from China's retaliatory tariffs, likely to hit US farm exporters. Egypt, too. A garments manufacturer there said Trump's move gives the country, quote, a very good opportunity to grow. That's as industry competitors Bangladesh and Vietnam, which both run big surpluses with the US, await 37% and 46% levies. And Turkey, whose iron, steel and aluminium exports took a hit from earlier US tariffs, now also stands to benefit, as other global traders endure even higher tariffs. Despite a tariff of 26%, India is looking for opportunity in its Asian rivals' greater misery. According to a government report shared with Reuters, the sectors where India can gain US market share include textiles, apparel and footwear. India is also hoping to gain a bigger share of Apple's iPhone manufacturing from China because of the tariff differential. But the 26% tariff could still make the phone substantially more expensive in the US. Ultimately, however, the risk of a tariff-induced recession will limit the upsides for any international trader. Reuters Econ World podcast host Carmel Crimmins.
When the US economy suffers, everyone suffers. So, relatively speaking, there may be some winners, but in absolute terms, everyone's a loser.
The latest US tariffs came into effect on April the 9th.
The United States will take back the Panama Canal from Chinese influence, said Pete Hegseth on Tuesday during the first visit to the Central American nation by a U.S. Defense Secretary in decades.
Together, we will take back the Panama Canal from China's influence. Together with Panama in the lead, we will keep the canal secure and available for all nations.
More than 40% of U.S. container traffic, valued at roughly $270 billion a year, goes through the Panama Canal. That accounts for more than two-thirds of vessels passing each day through the world's second busiest interoceanic waterway, which the United States built more than a century ago and handed over to Panama in 1999. Trump has complained that it was a bad deal for the United States. On Tuesday, after talks with Panama's government and President Jose Raul Mulino, Hegseth vowed to deepen security cooperation with Panamanian security forces. He said China would not be allowed to weaponize the canal by using Chinese firms' commercial relationships for espionage. That language appeared fine-tuned, talking tough but offering some assurances to Panamanians still unsettled by Trump's threats to reclaim the canal, while not ruling out using military force. Discontented Panamanians took to the streets in the capital Panama City on Tuesday in protest of Hegseth and Trump, as well as President Mulino, who they called a traitor and accused of giving away their sovereignty and self-determination. U.S. officials and experts say the United States has found a willing partner in tackling Chinese influence in Mulino, who in February announced Panama's exit from China's flagship overseas infrastructure plan, the Belt and Road Initiative.
Asian stocks roared higher in early trade Thursday after US President Donald Trump paused most of his new tariffs for 90 days. The move came after days of market turmoil that wiped trillions of dollars off the value of US stocks.
Well, I thought that people were jumping a little bit out of line. They were getting yippy, They were getting a little bit yippy, a little bit afraid.
Japan's Nikkei index jumped over 8% early on, following huge gains for Wall Street. Exporters were among the big gainers at the open, with Toyota up close to 10% and chip gear maker Advantest surging by 15%. South Korea's Kospi index jumped 5%. But there were more modest gains for stocks in China, where Trump has not paused tariffs. Instead, he turned up the heat again, saying he would raise tariffs on the country to 125%. That could set the stage for further action by Beijing, which has vowed to resist what it calls American blackmail. Hong Kong's Hang Seng Index gained over 2% in early trade as investors took stock. Now, Trump's stunning reversal could allow time for talks with trading partners. Despite all the turmoil for equities, it may have been the bond market that spurred the change of heart. Investors had grown alarmed by a slide in US government bonds, which normally gain in times of crisis. Some traders said the moves were a sign of major trouble brewing. Trump himself alluded to the worries.
The bond market is very tricky. I was watching it, but if you look at it now, it's beautiful. The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy.
US benchmark bonds stabilised following the move on tariffs. Meanwhile, oil prices initially rose, but they fell again on Thursday, with markets fearful over what the US-China trade war means for global growth. Investors also remain concerned over the wild unpredictability of Washington policymaking and the fact that a blanket import tariff of 10% largely remains in place. International benchmark Brent crude was down over 1% in early morning trade.
A U.S. judge has ordered President Donald Trump's White House to lift access restrictions imposed on the Associated Press over the news agency's decision to continue to refer to the Gulf of Mexico in its coverage. The ruling by Trump appointee, U.S. District Judge Trevor McFadden, restores AP access to the Oval Office, Air Force One, and events held at the White House while the AP's lawsuit moves forward. The AP sued 3 senior Trump aides in February, alleging the restrictions were an attempt to coerce the press into using the administration's preferred language. Lawyers for the Trump administration have argued the AP does not have a right to what the White House has called special access to the president. McFadden said his ruling will not go into effect until Sunday, to give the Trump administration time to appeal his decision. The judge is expected to issue a final ruling in coming months. That ruling could also be subject to appeal.
China retaliated against US tariffs on Wednesday. Beijing announced it will impose 84% tariffs on US goods from Thursday, up from 34% previously announced. It's the latest aggressive move in a global trade war started by US President Donald Trump. US Treasury Secretary Scott Bessent called China's latest move unfortunate and a losing proposition for Beijing. Trump's reciprocal tariffs on dozens of countries took effect earlier Wednesday and saw massive 104% duties on Chinese goods. The tariffs have shaken a global trading order that has persisted for decades. It's further raised fears of recession and wiped trillions of dollars off the market value of major firms. Trump nearly doubled duties on Chinese imports, which had been set at 54% last week. That was in response to previous counter-tariffs from Beijing. Earlier in the day, China called its trade surplus with the US an inevitability. And Beijing warned it had the determination and means to continue the fight if Trump kept hitting Chinese goods. China also told the World Trade Organization Wednesday US tariffs threaten to further destabilize global trade.
Tesla starts selling cars in Saudi Arabia on Thursday. It's a country where a 559-mile highway linking the capital Riyadh and holy city of Mecca has no charging stations. Electric vehicle sales in the kingdom totaled just 2,000 last year, according to industry data. But Saudi Arabia has huge plans for EVs that Tesla has not been able to tap. That's partly because of a feud between its billionaire CEO Elon Musk and the kingdom's powerful public investment fund. But relations between Riyadh and Musk have improved since he took a high-profile role in Trump's administration. In a coup for Riyadh, Trump is set to visit Saudi Arabia in the coming weeks in his first foreign trip. That's after asking the kingdom in January to spend upwards of $1 trillion in the US economy over 4 years. Tesla's Saudi move also comes at a challenging time for the automaker. It posted a 13% drop in first quarter sales earlier this month, its weakest performance in nearly 3 years. It was driven by a backlash against Musk's politics, rising competition and delays for a Model Y refresh. Saudi Arabia is investing an estimated $39 billion in developing the EV sector. But Musk has work to do in the region. Tesla's Saudi debut lags that of Chinese giant BYD, which opened its Riyadh showroom in 2024. And while it might not face angry protests seen in Europe and the US, A lack of charging stations is thought to be an issue, especially as the kingdom's summer temperatures can drain EV batteries more rapidly. Yet Riyadh has massive development plans, which include a goal of 30% EV adoption by 2030.
Donald Trump said Wednesday he does not want to see US steel falling into Japanese hands. Though he didn't quite say as much, the US president appeared to oppose Nippon Steel's $14 billion bid for its American rival.
And we love Japan, but U.S. Steel is a very special company. We don't want it to go to Japan or any other place.
Earlier in the week, Trump had ordered a national security panel to take a fresh look at the deal. He asked the group to determine whether fresh action was needed, raising hopes in some observers that the move could actually get a green light. However, his latest comments sent US Steel shares tumbling in after-hours trade. The stock dropped as much as 14% before recovering some ground. Nippon Steel shares gained strongly on Thursday, though, rising along with other exporters after Trump postponed most of his new trade tariffs. Neither company responded to requests for comment on the latest news, and White House officials wouldn't elaborate on Trump's comments. First announced in December 2023, the takeover plan almost immediately ran into opposition. Previous President Joe Biden eventually blocked it on national security grounds. Trump also opposed it while running for the White House. But since taking office, he has sent mixed messages on whether his administration will ultimately block the deal.
Chinese producers of plastic Christmas trees and decorations expressed worry on Wednesday. That's as US President Donald Trump's tariffs took effect, including 125% duties on Chinese goods. China's Christmas industry said on Wednesday that orders from the US have slowed, with both sides cautious about the risk of import tariffs rising further. These tariffs are the latest step in an escalating trade war that threatens great pain for China, the world's largest exporter of manufactured goods. US retailers are almost completely reliant on the country for Christmas decorations, sourcing 87% of their goods here. Chinese factories are also heavily dependent on the US market, where they sell half of what they make. Li Bo, a product developer at Jiasong Craft Factory, said before the latest tariff hike, US clients asked his company to ship as early as possible. Now, he says, these clients haven't rushed for products and are in a wait-and-see phase. China's 84% retaliatory tariff on US goods came into effect on Thursday. That's up from the previously announced 34%. American Christmas Tree Association's Jamie Warner said she's concerned as tariffs ramp up.
We're really not sure how the consumer is going to react to this, but with prices will definitely double for all of our products. And we don't know if that's
fell
sustainable.
On Wednesday as the rollout of steep US retaliatory tariffs deepened fears of economic damage. The pan-European Stock 600 slumped over 2% in morning trade as the previous session's rally fizzled out. The trade-sensitive German DAX index also fell by a similar amount. The Stock 600 is currently about 15.5% below its all-time closing high and nearing the 20% threshold that would confirm a bear market. Rate-sensitive banks also slumped Wednesday as traders fully priced in an interest rate cut from the European Central Bank next week. US President Donald Trump's reciprocal tariffs, including a 20% levy on select European Union goods, took effect on Wednesday. The 27-member bloc was due to vote on initial countermeasures later in the day. European pharma giants Roche, Novartis and Novo Nordisk all dropped over 5% after the American president reiterated plans of a major tariff on all pharmaceutical imports. The concerns also spilled over into bond markets. US Treasuries extended heavy losses on Wednesday in a sign investors are dumping even their safest assets. The 10-year US Treasury yield, the globe's benchmark safe haven anchor, was unmoored, and long bonds were the focus of intense selling from hedge funds. The yield crossed 4.5% at one point, even as traders ramped up expectations for US rate cuts, and in another signal of dislocation in the markets, the dollar fell against the euro and yen.